very, very good ride. Very interesting ride, I must say. We've been able to explore a whole lot when it comes to financial literacy, talking about savings and all. So it has really been an interesting. And I must mention that tonight is going to be a very, very wonderful one. Our previous session, we've always had just one, one of our guests speak. And tonight we are going to be having two major guests that will be speaking, and also we are also going to be having so very interesting to just take note of everything, every knowledge that will be dished out tonight. And before we kickstart, just particular session and security basically is all about. So at Earlier Investment, we focus on helping individuals to move on financial uncertainty to structured wealth building. We do this through two core services. And the first service is that we actively manage investment on your behalf. We basically help you to manage your investment to optimize long-term growth. And the second one, which is fixed income savings, we help you design and provide stable and predictable returns ranging from 6.25% to 25% per annum. And our goal is simple. The goal is to help you make smarter financial decisions with clear confidence. So this is basically what we do at Hilliard Investment and Security. And I look forward to you reaching out in order to move forward when it comes to your financial literacy, building your wealth and all. But then before we move into the session, we have a culture of giving a market recap, talking about, what the market is currently saying so that our audience can also benefit from it, and, they can also implement that in their portfolio. So I'm going to be giving my colleague Abdulkader the mic for him to give us a market recap. How is the market currently doing? What's the bull? What should you invest in? What should be what should be at in long time? What has happened in the market the last week? Thank you so much, Abdulkader. You have the mic.
All right, thank you so much, and welcome everybody. Welcome to this session on our monthly or on our annual. I don't know how to put it. Just welcome to the webinar. So I'll be taking the market report. So first one here, I have the equity. We have a total turnover of 3.805 billion shares that worth 218 naira on 202 deals was traded this week by investors on the floor of the exchange. And we also have equity turnover that lasts 5 years, ranging from 20th of April, 21 of April. And we also have the price gainers for the week. We have UAC and PLC with growth rate of with open price of 100 naira and the closing price of 142. We also have Union the Consult PLC, we have on Allied Industry PLC, we have Trans Nationwide Express PLC, we have Zikis Agro Allied Industries PLC, we have CAP PLC, we have Lafarge Africa PLC, we have PZ Cuisines Nigeria Oatco PLC, we also have Unilever Nigeria PLC. And the top 10 price decliners are the Infinity Trust Mortgage Bank PLC, And we also have AB Mortgage Bank. It's also funny we have two mortgage banks on the list. Perhaps maybe Nigerian are not so aware of mortgage business, or they don't really trust the mortgage business, because for weeks or for the past few months, the mortgage industry been consistently be on the list, especially Abi. I don't know. So we also have Guinea Insurance PLC, we have Stanbic IBTC Holdings PLC, we have Living Trusts Mortgage Bank again. We also have Sovereign Trust Insurance PLC, we have Transcorp Power PLC, we have Mia PLC, we have Legend Insurance PLC, we also have MPF Microfinance Bank PLC. And also, um, so the major highlights here, we have Dangote Sugar Refinery proposed rights issue. So the trading license holders are hereby notified that Dangote Sugar Refinery has, through its stockbrokers, Maritime Stockbrokers Nigeria Limited, Stanbic IBTC Limited, and Vetiva Securities, submitted an application to Nigerian Exchange Limited for the approval and listing of a rights issue of 8,970,918,827 ordinary shares of 50 kobo each at 16 naira per share, on basis of two new ordinary shares for every three existing ordinary shares held, as at close of business on Monday, 20th of April 2026. And the qualification date for the right issue is Monday, 20th April 2026. So yeah, that will be all from me.
Wow, thank you so much, Abdulkadir. I'm sure that a lot of research have actually gone through the market recap. I'm very sure that this is a whole lot of what we just listened to is not just something that was just picked from somewhere. It is a study of what has happened in the markets in the past few weeks, and I'm sure many of us also take notes. And I want to believe that we were able to pick one or two things from there. Um, Now we move into the webinar itself. I'm sure we've been waiting for this particular moment. The topic for today, I want to, before I move in, I want us to use the emoji just to confirm that we are all with us. All right. Thank you so much. Thank you so much, Toby. Thank you so much, Oluwa Bukolami. Yes, I'm so sorry for pronouncing the name that way. Yeah, thank you so much, guys. Thank you so much. Yes, so today's topic is investment foundation, simplifying asset classes. Um, there's going to be a lot. It's going to be dissected here. And some of the things that we'll be looking to will include the difference between investment options available to you. I'm sure I guess we'll also be speaking to how this asset actually work and how to approach investing with the right mindset. So I'm sure some of the things that I'm going to be saying are going to be tilting towards some of these things I've listed, and I'm very sure that we are all anticipating this particular session. So I'm going to be inviting our first guest, which is the founder of Eliad Investment and Security. I want you all to use the emoji. I want you all to use the emoji to welcome him on board. Um, Mr. Elijah Adeleke, thank you so much for all the effort. Thank you so much for bringing in guests who are going to be dishing out, of course, invaluable information. Yeah, thank you so much. Our second guest is Mr. Oluwaseyi Owolabi. Thank you so much. Thank you so much, sir, for joining us tonight. I'm sure colleagues here have their pen and books to jot down every line of whatever it is you are going to be dishing with tonight. So, but then I want you all to just use that emoji to welcome them. It's not easy to spare out time to give out information that we all are going to be having tonight. So thank you so much for using the emoji. Yeah, thank you so much. Thank you so much. Thank you so much. Yes, now I'm going to be handing over to Mr. Elijah. Mr. Elijah, sir, you have the floor.
All right. Good evening, Abdusalam. Good evening, everyone. Can you
Yeah.
hear me?
Loud and clear, loud and clear. Thank you so much.
All right. Beautiful. So I welcome everyone to this session. So as Abdusalam has explained, this is a monthly thing that we do. So it's what we talk about investments, and
All right.
I hope you can see my screen.
Yeah, I was breaking it, but then I think we can hear you now.
All right. So this particular one, we're going to be talking about investments, and part of the things we're going to be talking about is regarding investment foundations, right? So investment on its own is a broad topic. So thanks to Allied Investments, we chose to break this down through this webinar. So that's why we have investment foundations, right? So investment foundations, the basic things we're going to be discussing today, the different asset classes that you can invest into, the risk and return of investment, how to invest in these assets, and also the key considerations before investing. And finally, we're going to be visiting Allied Investments products. Those are some of the products that we offer at Allied Investments. Now, investment foundations. Let's start from the very basic. So, an investment is any asset that possesses a level of risk which you put your money into with the expectation of receiving more than the value you have invested. So, at the most basic level, when we talk about investments, everyone has one kind of investment or the other, right? And when you say an investment, it is that thing that you use your own money to buy and you expect something back. Most likely, what you're expecting back is supposed to be higher than what you have paid for that particular item. And as we go on in this session, you would find out that many of us even have certain assets that we do not even know are actually investments. But let's go into why you need to invest. So if you look at my screen right now, you would see I have about um, three statistics here. We have the Nigerian Bank savings, which is 7.39%. We have the federal government Nigeria savings bonds, which is 15.42%. And then the NGX 30 index, which is 49.14%. So looking at these numbers, it may seem confusing at first, but I tell you right now, what you're looking at here is the reason why you need to invest. Now, the first percentage you are looking at, which is for the Nigerian bank savings. So this is how much Nigerian banks would pay you if you invested, or let me say, if you saved money with any Nigerian bank as at 2025. So this is the interest rate on savings as at 2025 as far as Nigeria is concerned. Right. So if you put 100,000 naira with any Nigerian bank, let's say from the start of the year, by the end of the year, you'll be getting something around 107,000 naira. That's to tell you that you get an interest of 7,000 naira. And I believe everyone can agree with me that the Nigerian bank is probably the safest way you can keep your money. And a lot of people actually prefer to save than to invest, right? And the reason for this is probably because of many people are afraid of the risk involved or are just wary of putting their hands into something that they do not understand. But thanks to this webinar, we are going to be helping you understand these things better. So now the second percentage here is the FGN savings bonds. That's the federal government savings bonds. So as at 2025, the average amount that federal government savings bonds are paying annually was 15.42%. So if you invested any amount into the savings bonds, you are expected to receive about 15.42% returns by the end of the year. Now, for NGX 30 index, so this NGX 30 index, it tracks the top 30 companies in Nigeria on the stock markets, right? The NGX 30 tracks the top 30 companies in Nigeria, and this particular percentage we are looking at here, 49.14%, is telling us that if you invested in the top 30 companies in Nigeria through this index, which is actually a representative of the whole Nigerian stock market, if you invested in this index, you are going to be getting about 49.14% by the end of the year. So that is to tell you that you are going to get almost half of your money in returns if you invested in stocks last year. If you invested in bonds, you'll be getting about 15% in returns. If you saved your money, you are expected to get about 7.39%. So that is what happened last year, right? So many people who are wary of investing, who would rather save or just keep their money in their banks, they would only be enjoying this first percentage, right? And I would also break it to you that if you have been investing, or let me say, if you have been saving through your Nigerian banks, there's also the factor of inflation, right? And everyone would agree with me that Nigeria currently is currently inflated, right? Everything is currently on the high side. Petroleum is over the roof, and everything is affected. So even if you saved you saved through your Nigerian banks and you are expecting about 7.39%, inflation, which is already about over 15% as at last year, would definitely offset this percentage interest that you're expecting. So more or less, it is like you're losing. On the other hand, if you're looking at the savings bonds, of course, it would help you to, of course, if you compare it to the inflation rate as at last year, it wouldn't affect you as much because you have invested in something that would help you to offset that inflation. And now for the NGX 30, you definitely go above inflation. So inflation has nothing on you if you invested in the stock market. So that is why you need to invest, right? Whatever you put your money into, based on those things that I have just explained, could help you understand that your money is probably sitting there doing nothing, and you are even probably losing money without even spending it. And that's even the most craziest thing. You're not spending money, but yet you are actually losing money. And that's what's happening when you are saving. Right? Of course, it will meet your needs, but most likely what you have anticipated to use your money to buy in January, by the time you enter June, which is your savings target, you probably wouldn't be buying it the same amount you thought you would be buying it in January. Anyway, let's move forward. So the different asset classes that you can invest into. So I have broken it down to about 6 asset classes. So when we're talking of investment, any kind of investment, it falls under these 6 asset classes. And the first one is equity. So you hear about stocks all the time, you hear about investing in stocks, shares, whatnot. So all of these fall under equities, right? And the equities, examples of these equities is, buying shares in companies. For example, the NGX 30 I mentioned earlier. If you bought any company on the NGX 30, that would be you investing in stocks, right? And just for clarity's sake, when we talk about stocks, this is basically we you ownership, right? It is you purchasing a percentage of an asset or a percentage of a company, right? So let's say Dangote, for example, they may choose to sell a certain percentage of their company to the public so people can invest in their company for their own growth and expansion. So when you invest in Dangote, you are simply buying shares of Dangote, and what that share that you're buying is actually referred to as stocks. Right? So you can buy stocks in Dangote, you can buy in Zenith Bank, MTN Nigeria, and other institutions like that. Also, we have the fixed income. So this fixed income is what I mentioned earlier. An example of fixed income is the federal government savings bonds, which I used as an example in the last slide. So the federal government savings bonds is also a federal government backed instrument. So this is offered by the Debt Management Office of Nigeria. So this is a way the government raises funds. So if government needs to execute a project or let's say at the start of every year, government comes with a budget, right? And with that budget, they also tell you this is how much they have, this is the deficit that they also have. So they are telling you that this is how much they need to raise to be able to meet up to the budget that they have set for, let's say, 2027. So with that, the way the government raises funds fulfill, to actually make up to the budget that they have set is through borrowing. And how do they borrow? They may choose to borrow locally or internationally. So when they borrow locally, they are borrowing from the public, and that's us. And they do this through us, through the federal government savings bonds, right? So this is an instrument that allows the federal government to borrow money from you and I, and then they pay us back in interest. So if you are investing in the federal government savings bonds, we you could invest into, let's say, a 15% savings bond, a 2-year savings bond at 15% per annum. So that means federal government will pay you 15% every year until the maturity of that bond. And after the maturity of that bond, you will get your 15% and then the capital that you have invested. So that's simply how the federal government savings bond or how bonds generally works. And then there's also the treasury bills. The treasury bills is also a fixed income instrument. So this treasury bill is you investing in cash, right? You invest in cash that has been kept for government purposes. It's also a way of funding the government, right? So when you invest in treasury bills, and this is even short term, you can invest in treasury bills for 3 months, 9 months, 6 months. Although treasury bills are usually higher, it usually costs much more to invest into, unlike bonds. So when you're investing into bonds, you can actually invest as little as 10,000 naira, you can invest as little as 20,000 or 100,000 or even more. While for treasury bills, I believe the minimum you can invest in treasury bills is about 1 million naira or thereabouts. So when you invest in treasury bills, they pay you a certain percentage after a set period of time that you have agreed with them. Now, cash and cash equivalents. So this is something that everyone is common with, and it may surprise you that the cash that you are holding right now is actually an investment. It's an investment that you own that you are not even aware of, right? So if you are holding, um, let me use a dollar note for example, because naira is not very profitable at the moment. So let's say the dollar note, if you have the dollar note and the exchange rate for the exchange rate of the dollar is, let's say, about 1,000 naira per dollar, let's say about 2 years back or so. And then if you want to exchange the dollar notes to naira today, I'm sure you'll be exchanging it for about 1,400 naira per dollar. So that's looking at that, you have obviously gained about 40% on your investment in cash, right? So currency itself can be an investment instrument. the cash that you're holding in your hands. In other economies, Naira itself probably has much more value than what they are spending in that country, right? So investing in cash itself can be an investment instrument, and the ways that people invest in cash could be through bank savings. Bank savings. I mentioned earlier that the Nigerian bank actually offers about 7% per annum as at last year. This year it may be different. So by saving in your bank is also a sort of investment, and then there's also high yield savings. Banks also offer something called high yield savings. So we also see this on many of our fintech apps that offer high yield savings at certain percentages. And then besides the high yield savings, yeah. So besides the high yield savings, we also have money market funds. So the money market funds is also a sort of instrument that helps you invest in cash, and this is actually offered by many brokerage firms as well. So this money market fund is also a sort of cash and cash equivalent asset. And then we also have the real estate. Everyone knows real estate. With real estate, you can invest into rent by you can invest into properties that pay you rent, or you can also invest in land that appreciates over time. And finally, we have the commodities. So commodities are assets that we see everywhere, right? These are gold, palm oil, agricultural products, cocoa, maize, you name it. So all of these are commodities that you can invest into as well. So now, what are the risks involved in these assets? Remember, while I was defining what an investment is, I mentioned that an investment is anything that possess a certain level of risk, right? So if they're offering you something as an asset that after some period of time you get a certain amount, and they're also telling you that, oh, there's no risk involved, my brother, I think you should run, because in any asset that offers a certain level of appreciation after some time also possess a level of risk, no matter what the asset may be. I said even cash on its own has its own risk. By holding cash, inflation comes and goes, and then the value of the cash that you are holding right now, tomorrow it may be worth less. So every kind of asset has a certain level of risk or return. Now let's look at the different kinds of assets and the risk and returns of these assets. So for equities, so equity is a high risk asset, and as we have seen that it grew above 48% in the last year, it can also drop sharply the same way, right? So remember, in equities, we are investing in companies, and comp companies do not always perform well. There are times that companies also perform horribly. So these stocks actually track performance of these companies, right? As so that's why investing in equities can be a high risk investment. So what are the returns involved in investing in equities? There's capital appreciation. That's when the stock price goes up or go down, and then there's dividends. So dividends is also a way that companies compensate investors. Companies compensate investors through dividends, right? So they pay dividends, let's say quarterly or monthly or even biannually. So that dividend is usually a percentage of whatever you are holding with that company. So in Nigeria, they pay dividends about from 0% to, let's say, 6%. On a very good day, you could see some companies pay about 10% dividends, but that would be very rare, right? So that's the possible returns you can get from investing in equity. Now, the fixed income, these are the bonds that I mentioned, the treasury bills, working with the government to actually get fixed income, let's say biannually or annually. So the risk involved in fixed income is low to moderate. And what is even the risk in itself? The risk is default, right? If you're investing in fixed income, remember, fixed income is not only offered by federal government, it could also be corporate institutions. For example, some companies may choose to raise funds through debt, right? So when companies are raising funds, they either choose to raise funds through equity, which is that which is that scenario where we buy shares in their company. If they don't want to do that, they can choose to raise funds through debt. So that means we, the public, we we buy into the debt instrument that that company is offering. So by purchasing that debt instrument, they will be paying us interest, just like borrowing from the bank. When you borrow from the bank, you pay interest to the bank, let's say on a monthly basis or annually, depending on your agreement with the bank. So fixed income as well, they also have a certain level of risk, especially when you are investing in corporate institutions. When you are investing in corporate institutions, the risk may be the risk of default. These companies may default in paying your interest. But when you're investing in fixed income from the federal government, this actually offers low to no risk, right? Because federal government is backed by full faith and credit. So federal government can never default um on your debt, right? So whenever they promise to pay a certain amount in coupons or interest, they will most likely pay up. And now, what are the returns? The returns is periodic interest, which is also called coupons, and the return of your full principal at maturity. So that's to tell you that the returns you get from investing in fixed income asset is basically from the interest that you'll be getting. So if you're investing in a savings bond and it says 15% per annum, that means every year you'll be paid 15% of whatever you have invested every year until the maturity of that particular asset. And then for the cash and cash equivalent, this is also um, a very low risk investment, right? I mean, we can easily invest. We can easily save money in the bank, and nothing will touch our money. Our money will not reduce. At least the value that we are looking at, it will not reduce. It will not increase. It will not reduce. It will not increase. But it will most likely stay stagnant. Sorry, 1 minute. Okay, so the returns for cash and cash equivalent is usually interest rates up to about 7%. And then for the real estate, the risk involved is moderate. It requires high initial capital, although because investing in real estate can be very expensive. And then it is illiquid in the sense that you you cannot easily sell real estate, right? You cannot easily sell real estate. Persons that have invested in real estate can definitely testify to this. As easy as you can buy land, it is not that easy for you to sell it, right? Most likely, when you need to sell your assets urgently, you will most likely be selling it lesser than what it's actually worth. And then the returns is the rental income, that's the rent that you receive or the appreciation on the asset. And finally, for commodities, the risk is high, although the risk include inflation, currency devaluations, or weather conditions. Bad weather also affects farm produce and the likes. And then the returns is also price appreciation based on global or local demand. So how to invest in these assets? So there are three basic ways you can invest in these assets, and one is professional management. So this professional management is simply working with professionals that are professionals in this field, and they help you to select the right assets to invest into, and you simply pay them management fees. So these professionals, they take on that risk of your ignorance, right? So you can just go into the market and just buy a few companies without knowing anything about it. And then in a few months, you see that you are now actually making profits. But when it comes to professionals, they actually know the risks involved and they know the right assets to put money into. So they choose the right assets for you, and in return, you pay them a certain fee, which most of the time is very little. So, in fact, when you see returns on your investment, you wouldn't even know that you paid a certain fee to get these returns. I call it free money, right? Trusting professionals, by trusting professionals, you are taking that risk of ignorance and just wasting money out of nothing. And then investment brokers. So these are for the people that like to do it for themselves. So the through investment brokers, you can through investment brokers, you can invest in these assets yourself. For example, stocks, there are a lot of brokers out there that allow you to buy these stocks through their platforms. And then we also have the real market. So the real market is just the market outside the real world. So you can buy corn, palm oil from the real world, all these things. You do not have to go through anybody except physical persons that you know, or people that sell them. So that's how you get those assets. And this actually applies most of the time for commodities. Also, some commodities are also traded on investment brokers as well. And finally, the key considerations before investing. Number one is you should know why you are investing. You should know why you are investing. Number two, and the reason you should know why you're investing is many people invest for short-term returns. Many people invest for short-term returns, and then after a period of time, they find out that they are not even they are not even meeting up to the returns that they have anticipated, right? And depending on the asset that you are investing into, right, some assets are long term while some assets are short term. So it is very important for you to know which asset you're investing into, if it is long term or short term. And then we also have the second thing you should consider, which is do not put your money into what you do not understand. Don't put your money into what you do not understand. So there's a typo here. So if you do not understand something, simply don't put your money in it. Always go through someone that has better knowledge in it. I talked about stocks earlier, and you see that stocks is the highest risk investment that you can probably invest into, right? And investing in this, you shouldn't go into it without prior knowledge, right? So you have to go through someone that is knowledgeable. And thirdly, invest through the right sources. Invest through the right sources. You cannot buy gold from a farmer. You cannot buy gold from someone that sells biscuits, right? It just doesn't work, right? So you have to go through the right sources and the right people. So if you are looking to invest, you go through stockbrokers, you go through professionals, people that do this already. I mean, if you are looking to invest in stocks. And finally, management fees and tax deductions. So you also need to understand, especially the management fees and tax deductions involved, especially when you are investing into um, when you are investing through stock brokers or all these brokerage apps. You need to understand the fees involved and the tax, also the tax that applies to you as an individual as well. So that's the considerations you need to consider. And finally, the investment products offered by Allied Investment. So at Allied Investment, we offer two major products, like Absalam mentioned earlier. And the first one is portfolio management services. So we offer professional services in managing your investment portfolios. So with this, we help you research on the right assets based on your risk appetite and the level of risk or the level of risk that you can take. You choose the assets that are best for you, we invest in them, and you keep getting reports on how your investments are performing. And by the end of the year, you see your returns and everything that you need to know about your investment. And then for the stock-backed fixed income instrument, we also invest in the stock market for people. And this is for people that do not have the appetite for risk, right? So we invest in assets and then we promise a certain percentage of returns after a certain period of time. And it ranges from 6.25% to 25% annually. So in 3 months, you get 6.25%. In 6 months, you get about 12.5%. In 9 months, you get about 18.75%. And in a year, it's about 25% returns. So all the risk involved is being taken by the company. All you just have to do is invest and just expect your returns. Right, so that will be all from my end. This meeting link is going to be expiring in a couple of minutes. So I think it's best we share another link. But before we continue, Sheyi, are you there?
Yes, I'm here.
All right, please, do you still have time for the next session or you're going to be leaving very soon?
I just told the person I might be 10 to 20 minutes late. So I'll try and round up everything within the space of 10 to 20 minutes. So I at
All
least
right.
by, yes, by 8:15.
All right, thank you. So I think we are going to have to create another link. So the link, this particular link is expiring 1 hour, although it's supposed to be 2 hours. I don't know why it's ended early. So please, another link is going to be shared, and how you're going to get it is going to be uploaded on the Telegram community. So if you join the Telegram group before, so please go there now. Another link is going to
Yeah,
be dropped
yeah.
there
I think we should also drop it in call
in the
message.
chat, right?
Yeah,
Okay,
in
so
the
let me
chat.
do that.
Thank you so much, Mr. Elijah. That was a very, very wonderful session. I want you all to use our emoji to appreciate all of the information that he has shared. He touched on a couple of things, part of which is on the fact that you need to be, you really need to be informed in order to make the. It's more like at the middle of the center of everything. If you are not informed, so you might make your own decision. And even if you are holding your money, it doesn't mean it's safe. Yeah. So those are some of the key things that you mentioned. So I want you all to just click on the link in the chat box now, just to join the next session. Olabi, do you have the floor now?
Good evening, everybody.
Yeah.
Am
Good
I
evening.
audible?
Yes, you are audible.
Can you see my screen?
Yes, we
What
can.
I'm seeing here is totally different from what should be. Okay. So, good evening, everybody. Just like what my brother Elijah has said, he dived what the foundations of investment and the foundation of wealth building, different asset classes, and also several forms of investment vehicle that can. But I would be going much deeper to talk more about alternative investments and what it is. And alternative or are most of us are familiar with stocks and bonds and fixed income and your traditional investments. But the truth is, young investors, feel stuck in what they consider low yield savings, right? Outside equity and its risk, many people still feel stuck in low yield savings. And also, on average, the global stock market, on average returns about 6 to 8%, except when they are outliners. And also, the idea that you can get three times the potential uplift by diversifying your asset portfolio into alternative investments. And the underlying truth is that the wealthy park their money in savings account alone, and they don't just put their wealth in specific asset class, right? So if you take a look at Nigeria's most wealthy individuals, that they are well diversified from, most of them don't even have traditional investment vehicles as their major source of income, right? Most of them built their wealth through alternative investment classes and also alternative investment sources. So, to give you a brief understanding of what alternative investment is an asset that falls out of the traditional publicly listed stocks, government bonds, and cash. Design, right? They all share a few common characteristics outside the fact that they are different from stocks and bonds and also cash. And the first major characteristics is that they tend to have lower correlation with the stock market. What this means is that when you think about wealth building, you think about that are not correlated, misbehaving, the potential that one is, doing the other is doing well would also be higher. But if you have all your eggs in one basket, then there is a problem, right? So another characteristic is that they offer less compared to your traditional investment stocks and bond that are very, very liquid and can be sold within the tweak of an eye, especially with this day and age that there's technology and you have fintech apps dominating the areas, right? So, and the major characteristic is that they offer higher return potentials that sometimes feel very, very unrealistic, right? Sometimes they feel very unrealistic. So, but they come with higher risk. It goes hand in hand. If you want high return, you have to be able to just higher risk. And the major characteristics of alternative investments is that they've been historically been only accessible to institutional or high net worth individuals, right? So these are people that are accredited investors and sophisticated investors and above. So previously, your everyday Joe like me and you couldn't afford clean alternative investment unless we are accredited investors. We have that 100 million naira threshold and above. So, but today the whole thing is changing with the evolution of the financial market and also with the growth of technology and the idea about decentralization. You are seeing this alternative investment class becoming easily accessible class, not just only the institutional investors. So, major alternative investments are real estate investment trusts, equity. We have the angel fund. We also have hedge funds, right? And we also have commodities. We have gold and oil. So, but I'll be doing a deeper dive into all of them. But before I proceed, I would like us to touch on private equity and hedge fund first. The reason why is because these alternative investment are still very much institutionalized, right? And they are still very much only accessible to a larger degree of the sophisticated investors. But real estate investment trust and also your commodities and crypto and digital are easily accessible by me and you. But private equity and hedge funds, they are still, they still have their challenges in Nigeria ecosystem. So what first of all, what is private equity? So private equity basically means investing in a you are investing directly in a business. So usually those businesses are private business, they are not listed on the stock exchange. So the essence of private, they're just like the name says, private company buying for some private public in some other countries too. So what they do is they basically look for a company that is either growing or a company that is either finding themselves in difficult financial situation. So rather than just only injecting loans, they inject equity and they also inject governance, meaning that while they are buying part of your company, they are also playing a key role in the executive function and also the governance function. So usually providing mentorship, guidance, and sometimes they will also provide their own particular network of advisories and the likes, right? So when you think about those, you also think about angel investing and startup funds. They are all quite similar and they are all in the same categories. You think about players like Vero Capital in Nigeria and also Sahel Capital in Nigeria. So Sahel Capital focuses on agriculture and also food business, right? So the second is hedge fund. So this is basically pooled fund that are managed
Sorry
by.
to interrupt, Shay.
Eh?
Your screen is still at the traditional investing is not enough page. So I think you need to.
Okay.
All right. Thank you.
Sorry, give me 1 minute. So, can you guys see the screen?
Yes, we can.
Yes, it's displayed now.
So, hedge funds. This is whereby you have several degree of accredited investors or sophisticated investors who pull money together and give an asset manager, and those particular asset manager deploys specific form of um, strategies in order to grow the money. So, but pay attention that hedge fund is a really really risky gamble. It's high risk, high reward, right? So it's high risk and they are very very aggressive with how they different strategies that they use from trading, physical commodities trading down to derivative trading, arbitrage, leveraging, you know, different kind of strategies, no limits, right? So the regulation less is usually less strict compared to what you have with pension funds, right? So, but in Nigeria, hedge fund we see in UK and in US, right? So, but we just have only what we have. We only have asset managers, and this who perform similar stuffs like hedge fund, but they are not as aggressive as hedge funds. So, but Nigeria's ecosystem is developing, is evolving. Next couple of years, one would expect that individuals would also generate higher returns for their investors using specific aggressive strategies. So, but the most important ones that low and high can have access to are the ones that I would like to focus on. So, the most popular alternative investments that we have in Nigeria is your real estate investment trust. So, basically, this is like, think of it like a mutual fund for real estate. So instead of imagine you want to build a house, right? You need income. You want to own a mall, right? And you need that consistent income. You need to invest so you can get income. But probably you don't have like 3 million to put in it. Yeah. Um, Most of us don't have 3 million, 300 million. Yeah. If you have 300 million, please let me know so that I'll come and greet you. So um, instead of looking or sourcing out for 300 million to build a mall, right? There are now institutions that do this on behalf of people. So they've financialized it, and they've also decentralized the ability of individuals like me and you to have access to income generating real estate assets, right? So they've found a way to package the investment stuff and make it available to average Joe like me and you. So you just think of it like you buying a share in a company that owns mall, a company that owns office complexes, and they own residential properties. And from all these properties that they have, they are getting yearly income, monthly or yearly income, right? So what happened is that as soon as they get those income, by law, a significant portion of this income is distributed back to those investors that bought into the project. By law, over 90%, you must give out or you must give back more than 90% of the income you generated as dividends for your shareholders, right? So, and the primary, I just want to let you know that the primary, unlike the stock market where you have capital appreciation, right? With the real estate investment trust, their primary income is from just rent. And sometimes you have cases of you have cases of property appreciation, which is also passed down to those investors. So just think of it like simplifying real estate investment for average Joe like me and you. If you have 5,000, 10,000, and you want to put it into a real estate investor, you want to be a real estate investor, but you don't have the millions to start. With real estate investment trust, your 5,000 is going to go a long way. You basically buy shares and you get a percentage worth of your shares. So how do you go about investing in this? It's simple. It's similar to investing in stocks. It's very similar to investing in stocks. It's as easy as investing in stocks. But first of all, you need a stockbroker, right? Like like the speaker before me said, you need a licensed rights channel, you know, and these are licensed stockbrokers who are listed on Nigerian Stock Exchange. So, and you can also go to your brokerage or you call your brokerage firm and you make inquiries about what real estate investment trusts products do they offer, and they would let you know. Or you can also buy it on your phone with PropTech adoption with fintech adoption these days. So, but there is another investment, alternative investment that has been growing in Nigeria's real estate sector that is very, very interesting. That is even decentralizing property ownership and also property investment in Nigeria, and that is crowdfunding platform. Just like you have GoFundMe's for social works, right? We are now having platforms where people can come together and pull in their money, yeah, and then they will use the money to buy a particular property or build a particular property and invest in another property, right? So this is what we should be looking at if you really want to tap into alternative investment for the nearest future. Outside real estate investment trust, you can also look towards crowdfunding platform. Like I say, technology is changing a lot of these investment assets for average Joe like me and you. So the second popular alternative investment, which also falls under the real estate class, is the infrastructure fund, right? So most people don't know that you can actually make money from building roads. You can make money from building telecommunication towers. You can make money from building power plants, and these are infrastructure funds, right? You have specific set of asset managers who collect money from several investors, and then they pull this money together and they invest into significant economic opportunity that has underlying demand. You know, so for example, if some of you are familiar with Lekki Toll Gate. Lekki Toll Gate is an example of infrastructure funds. There's a set of people behind it that are managing that pulled investors together, got the road done. Then they started collecting rates and money from bypassers who are using the road, and this money generates revenue, consistent revenue for their their investors. So how it works, long-term capital, right? So these funds are usually designed for people with patience, right? So you need patient capital for this kind of thing because it takes years to build, and it also takes years to get returns. So for example, you can have a road for like 30 years, 50 years, concessionary agreements that would see you um, yielding returns for like 50 years. Might take you about 30 years to recoup your money back, then you few other years to get additional income on top it. Because what is the point at the end of the day if you don't make money? So the cash flow is very, very predictable. You know how much you will be getting, right? You know that this is a public necessity and people always have to use these particular infrastructures. So the cash flow system is strong, is consistent, unless you have force majeure like wars and and the likes like natural disasters and the rest. So beyond financial returns, these funds aims to address national infrastructure deficits. So which makes them very, very popular with pension funds, right? So there's a whole lot of pension fund recapitalization that might also go on, just to drive capitals like this from pension funds, I think trillions of naira into infrastructure funds where you have safe investments and also consistent income because that is what pension funds are all about. You don't want to start gambling somebody's future away on equities. So how do you invest on this? um, it's not easy. It's not easily accessible. It's complicated, right? So, but you can actually get access to this through your what do they call it? Through your brokerage firm, right? So, though you need to be a saving investor, but I believe we're still going to get to those particular points in time in the nearest future. So there are some people some asset managers also provide such kind of funds, just like mutual funds. I even saw Coronation today introducing their infrastructure funds. So if you have a broker, you can call your broker up and ask them which infrastructure fund is available and how you can go about it. So commodities, that is my would I say my mainstay. That is where I am. That is what I love. So basically commodities are the best asset class you can ever have in the world. So they are raw materials that power the global economy. Think about gold, oil, cocoa, and lithium. So unlike stock where you have ownership in a company and bonds which are loans, debt, physical commodities, commodities are physical assets, right? They are physical assets that has value, and the value appreciates and the value also fluctuates. So when you talk about commodities, two types of commodities, the hard and the soft commodities. So for the hard commodities, these are commodities that must be mined or must be extracted from the ground, right? Real assets. So gold, copper, crude oil, natural gas, and also iron ore. And when you talk about soft commodities, these are things that has to be grown or reared, right? So cocoa, wheat, maize, cattle, and agricultural produce in general, except vegetables, right? So, like stocks that you have, like stocks where you have where you have the price driver or the value driver being earnings, valuation and everything, right? Commodities is totally different. It's solely driven by supply and demand dynamics, right? So, for example, most of it's very fundamental, right? When you're talking about commodities, your analysis has to be mostly fundamental analysis. So, looking at the supply, is Iran is sorry, is Nigeria producing more oil? Are people buying more cars? That's supply, that's demand. You understand? Is the mines are the mines churning out gold, right? Are the mines churning out copper? Are people buying more cars? Are people building more cars? Is the industries booming? That is supply demand dynamics. So those are what you would have to understand if you want to invest in commodities. So, but a major part of soft commodities, demand driver or price driver for soft commodities is weather, right? So climate change affects crop yield, climate change affects crops, right? So if the weather is bad, you get bad crops. That's reduced supply, right? Which basically spikes price up. So that is the dynamics. And you can't talk about commodities without talking about geopolitics. Geopolitics itself is not the problem, right? But the effect of geopolitics and the effects geopolitics have on commodities are they are long and far reaching. So, for example, the tension in the Middle East has caused transportation between the Strait of Hormuz to basically come to a stop. So, it means that countries like Saudi Arabia and Iran and those Arab countries can't move crude oil down to the global economy. So, that's reduced supply, right? So, and you are having increased demand. People have to be going to work, people have to drive, the economy has to move forward. So obviously, when that supply and demand imbalance comes in, you get price skyrocket. That's why crude oil is now trading over $100 within the shortest period of time. So the demand drivers again for most commodities are energy transition. Yeah, as the world is moving towards EV, you are seeing more cars, more electric vehicles coming out. And what are electric vehicles? Electric vehicles are basically commodities that has been processed and research has been done and they've all been put together. So if you break down a car, you would find steel, iron, or if you break down a car, you find copper, that is your wiring. If you break down an electric car, you find battery metals like lithium, right? Like cobalt, right? So to connect all of this together inside the car, you need tin. So if they are producing more cars like that, it means that you need more of these materials. And if you don't have the mines that are producing this thing, bringing out the equal materials that is needed for that demand, you are going to have a supply and demand imbalance. And that's where you can capitalize on. That's what and where you can capitalize on as either an investor or a trader. So the current market outlook for the commodities market, you have energy is currently in a bull market. Brent crude is trading high over 100 because of the geopolitical tension. So for the precious metal, gold, silver, and also at their all-time high, those are like safe haven commodities and safe haven assets. When the world is going crazy, people run to gold and silver because it is, it's safe, right? So, and you also have central banks like China after the United States sanctioned Russia and also seized some of their assets, their foreign assets. People started buying people started buying more gold, right? They started by central banks started buying more gold, changing their dollars for more gold, since it's it's more value. It's the real currency. Do you understand? So for base metal and industrial metal, the dynamics differ. For gold, for copper, tin, lithium, the prices changes. It depends on the supply and demand dynamics of individual um, commodities. For tin now, you are having low supplies in Myanmar, in China, and you still have rising demand for electric vehicles. That's why you're seeing tin price skyrocket. Same thing with copper, but you don't have the same thing with lithium because everybody now produces lithium, right? So now the supply is too much and the price of lithium has dropped. So for agriculture, our non-oil export is rising, right? And you are seeing that climate change also affecting our yield. So the agricultural market is still facing that structural supply deficiencies and effects. So, but how do you invest in all of these commodities? I'm sure it sounds interesting. So the most easiest way and the most direct way to do this is to buy the commodities themselves. So imagine you realize that the world is going to burn tomorrow. You can go and buy gold, go and buy physical gold, right? You are investing in gold. So you can buy 1 gram. It depends on the kind of aboki that you know, right? So you can buy 2 grams. You can buy the littlest gram. I think 1 gram is about 145,000 if I'm not mistaken. If I'm not mistaken, right? So you can buy it, keep it in your safe, keep it in your house, or you can wear it on your neck. You can use it as a ring. You are investing, right? So the second one, for obviously you can buy uranium, by the way. So if you're thinking about buying uranium, you can buy uranium, but you can buy gold and silver. I buy tin myself. I buy tin from Joss. I also buy copper and the likes. So, but local trading, the way direct investment means local trading. For example, now, if you go to a village in let's say in Kaduna State, where they produce rice a lot, you can buy it at the lowest possible cost, right? Send it to another town and sell it at the highest possible price. So that's what you just call local trading. That is the easiest way to invest in maybe rice, agricultural produce, and surprisingly tin, even gold and silver. People go to Kano, Nasarawa, they buy gold, right? Then they take it to Lagos and Dubai and they sell it. So that is how people make a whole lot of money these days. Even Dangote started with salt. He started buying and selling salt. Started buying and selling commodities. Same thing with Otedola. Same thing with all the billionaires that you have today. This exact same blueprint that they started, just to show you the potential of creating a solid investment foundation for a solid investment and financial freedom foundation for your life. So, but there's another way you can invest in all of this equity traded fund. It's more fancier, it's more modern, but it's not that gaining traction in Nigeria, right? So another thing is you can buy commodity related stocks. So for example, now you see Aradel and some oil companies in Nigeria making gains. It's largely because oil prices has increased. So if you can buy oil, if you can buy tin, if you can buy gold, you can invest in Aradel Holdings. You can invest in Japan Gold on the Nigerian Stock Exchange. Who just started diving into gold mining and the likes. So commodity exchange, now you are having more complicated financial derivatives coming out for commodities. You have global platforms like CM exchange. You can actually do that from here in Nigeria, but you have to have a whole lot of documentation. But however, Nigeria is also coming up with our own commodity exchange where you can buy the paper rice, where you can buy paper gold, just like stocks, instead of buying the actual commodities. So if you're interested, check out Lagos Commodities and Future Exchange, check out Nigerian Commodities Exchange, and also check out Africa Exchange Effects. So you can buy your rice there, by the way. So why add commodities to your portfolio? It's an inflation hedge. Basically, price of commodities goes up too. So you hedge your inflation naturally with buying commodities. So it's also diversification. You diversify your assets. So, but before you buy any of these, ask yourself that are you looking at commodities from a trading perspective or as a long-term investment hedge for your wealth? Do you just want to buy and sell, or do you want to buy and hold? So as for crypto, crypto is quite common. We all know what crypto is. We are all familiar with cryptocurrency and the digital ecosystem. So basically, it's the digital version of money that doesn't need a central bank, right? It runs on an independent blockchain system. So the independent blockchain is a digital ledger. So think of it like a big global notebook where everybody can see every single transaction, but nobody can edit any single transaction. And if anyone wants to edit any single transaction, every single person on those nodes would have to agree before any change can be made. So it's going to make it very, very difficult for it to be tampered with. So that is the idea of decentralization, something that is missing in the Nigerian, in the global financial markets, where you always have capital and cash flowing through few intermediaries like Zenith Bank and UBA and the likes of them. But with cryptocurrency, you have none of those people there, and you can also execute smart contract on this. So imagine you are having stocks. You have your stocks. You need your stocks. You need your stocks dividends paid to you. It can be automated through smart contract on the blockchain. So you guys should also watch out for how those kind of things can play in the Nigerian market itself. So the 2026 regulatory landscape in Nigeria is changing. So you have some changes last year in the Investment and Security Act, so which legalized crypto, made it a legal tender in Nigeria, highly regulated. And by the way, your profit from crypto is now treated as chargeable gain. So expect to pay up to 25% of your, I don't know, of your income, of your income from cryptocurrency, right? And now the banks, now CBN has also allowed banks to provide accounts to licensed crypto exchanges. That's why you're having local exchanges like Zibuba, or what do they call them? So we are moving forward and we are heading ahead. And in all of this, how to invest. So you look for a compliant exchange broker, right? Like I said, Busha. The name of the company is Busha. So it's a locally built exchange, SEC licensed. It's in Nigeria. You can buy and sell your crypto there. Any kind of crypto is Nigeria. So you have Binance, which is the global leader for crypto exchange. You have Luno, which is good for buy and hold. They have strong security system. So if you want to buy and hold for a long period of time, Luno is also a good decision, but it is not advisable to have it on Luno, right? So don't keep your money or don't keep your crypto on one exchange. If you buy a crypto on one exchange, right, send it to a private wallet, or you divide your money into several exchanges, right? I've faced that particular risk before with FTX. When FTX collapsed, I lost a whole lot of money, right? So you want to take out that exchange risk out of your portfolio, diversification. So you can use hot wallet, soft wallet like MetaMask, or you can use cold wallet like Ledgers and all those USB kind of things, right? So if you want to go into crypto, it's highly volatile, but you can start with Bitcoin and Ethereum, which are the big brothers of the whole crypto exchange system. And if you are looking to have exposure to USD, right? If you are looking to have exposure to the foreign exchange market, you can also buy USDT, which is like the crypto version of the US dollars. And more importantly, you are seeing a change from just paper money to reward assets, where you have digital representation of real world assets, and this is where tokenized real estate comes in. So now think about crowdfunding and think about real estate investment trust, but on blockchain, right? Using smart contracts to execute all of the agreement and execute all of your payout and dividends. So that is where the future is, and that is where Nigeria is going with alternative investments. So in all of this, you want to know the risk level of what you are trying to invest in, right? So you have to know your risk tolerance, and you have to know the level of what you on the lower end of it all, you have savings and savings and T-bills, right? So on the mid end of it, you have real estate and also commodities. And on the other end of the higher risk, you have private equity And the highest of all, which has the higher risk and the highest returns, are crypto, right? So the higher the risk, the higher the rewards. And that is what alternative investment are all about. So if you want to move ahead this week with investment, right, I would advise you to do these three things. You audit your current portfolio, you pick one alternative to research on this week, and you also allocate a learning position. Start small, 5,000, 20,000, 30,000, whatever your capacity can, and make sure that you stick to your investment goal. So keep learning, find the community, and also start small. Thank you very much. Hello?
Hi, thank you
Yes,
so
very
Yes, I will
much.
need to go now.
thank you.
So thank you very much.
Yeah, thank you so much, Mr. Olabi. That was a very wonderful session, I must say. It has really been an interesting ride, getting from Mr. Elijah down to Mr. Olabi. It has been a very, very wonderful session. So, majorly, I don't know if any of us have any question for Mr. Olabi or for Mr. Elijah. So I would like us to just we can drop it us or we can kind of use our virtual hands. If you have questions, we can use our virtual hands or we can drop it in the chat box. Uh, so as we wrap up this to tonight webinar, I hope today's session has given everyone more clear, and we all need to remember that the goal is not just to invest, but to invest with understanding, and which is the major reason why we are doing having this webinar. So if you are ready to take the next step, earlier investment and security is always there, and it's your go-to firm when it comes to everything investing. Follow us on LinkedIn and Instagram at Elliad Investments. Thank you once again for joining us today. We look forward to seeing you in our next session, and do have a good evening.